Today we'll be discussing what's been happening with the US economy, including why so many Americans are living paycheck to paycheck and how some restaurants are struggling to stay open due to high gas bills. What about billionaire Leon Cooperman talking about the possibility of US recession and a drop in the stock market? We're going to cover other important topics like emerging markets, potential housing issues in Canada, and an Oregon bill that proposes to pay homeless people $1,000 a month. I also have some interesting real estate news, including the possibility of turning old malls into apartments and the booming luxury market in Dubai. So let's begin. Let me show you what's happening. First things first, I've shown you many different surveys that all point to the same information. And here we have it yet again, 60% of Americans live paycheck to paycheck. Inflation is part of their everyday lives. Cost of living continues to go up. The quote here, consumers have accepted that inflation is part of their everyday lives because they're just gonna try to deal with it. And how do they deal with it? Well, it depends on the circumstances. For a lot of people, they have to cut back. They're taking away certain purchases that they used to have, maybe a luxury item that they no longer need, and they say, okay, that's just the way it goes. We're not going to buy that anymore. Their expenses have gone up. They're still spending a lot of money, but they're not getting as much or as many things as they did before. And then, of course, they have all of their bills that have come through at this point, which have increased. They're hoping it comes down, and they're simply living with it and dealing with it. So I've shown you, the different surveys that have come out, and there's sometimes it's 60% and sometimes it's 72%, but it's within this range. And it doesn't matter how much somebody makes. It all really shows us that, at any level, people are just going to take on the maximum amount of debt. They also show us the fact that people have spent last year during the holiday time frame, Christmas, Black Friday, all of that, people had spent money, and then 1 year later were still trying to pay off the debt they took on the previous year. Unbelievable. Truly unbelievable to see it, okay? This is credit card balances. What do you think about that? Is that extreme? Does that show a strong consumer? Because that's what they tell us. This chart is off the charts. We're talking about a level that you can't pay that back. You cannot. The average person cannot pay their debt back. So they might have to go renegotiate that debt. They might have to go and actually get that paid down. But for a lot of people, they are in circumstances they can't get out of. It's the same thing though. Don't feel alone, because the government is in the same situation. They are now paying what will soon be $1 trillion in interest payments on the debt. So when you have to pay your credit card bill, just remember the government's in a worse circumstance than you. Are you saving enough? A shocking 60% of non-retirees are concerned about their retirement savings, according to data by the Federal Reserve. Look, it's everybody in the same circumstances. The majority of people. I say this all the time. It's the majority of people. It's not as if it's just a few people. There's always going to be outliers on the bottom of the top. In this circumstance here, we are living through it right now today, where people cannot pay their bills. They don't have enough for retirement, and they're hoping that they hit the jackpot, whether that's in the lottery or whether that's in some sort of investment. And that's why more risk is being taken today. And by the way, more risk, not on an individual level too, we're seeing pension funds and all these different things. Look at the Canadian pension fund that was invested in FTX. Didn't go so well. Okay, yes, they have a lot of winning investments, but they're taking these extreme risks because they know they have to get higher yield in order to be able to actually pay people back. I don't think people realize that. Unless they take some high risk and win them all, they're not going to be able to pay you back what you hoped you had. That's a really scary thought. Shocking, impossible gas bills push restaurants to the brink of closure. This is all over the place, all over the world. California, they're showing you Vietnamese restaurant in this example. It doesn't matter. The point is, the bill is too high. It was way lower before. And now, what do you do when your bill has more than doubled? That's the circumstances for many people. More than doubled in your gas bill, that takes right away, just completely takes away from what you had. And there's no way you're going to be able to get around that. How? How can you do that? If your bills are too high, just like any individual, what in the world can you do? Well, you have to cut back on staff. You have to cut back on your products. Maybe you reduce your quality. Suddenly your customers don't like it anymore. They start leaving. You're in big trouble. It's a spiral down, and a lot of restaurants close as a result of this. And so what do? When they're closing, obviously they're laying people off. Everybody gets laid off. During 2020, for so many businesses, small businesses, they laid off everybody, and it was just the one person. And they worked there, and they said, look, when things get better, when we reopen in 2 weeks, I'll hire you back. But of course, we know how that went, right? And this could happen at any time. So this is the it's my favorite, Janet Yellen. I don't know if you know about Janet Yellen. Yes. She said that the extraordinary measures taken by the Treasury Department to delay breaching the debt ceiling will help the government pay its bills until at least early June. And that's why I talked about it, did that video saying the government's going to go bankrupt in the summer. Well, we know that they're going to do something to push that off, raise the debt ceiling and so on. But essentially what she said is that it's inconceivable for the United States, whose currency, the dollar, serves as the world's reserve currency, a country with the deepest, most liquid financial markets where treasuries are the ultimate safe asset, and with a credit rating the United States has always had, to default on its obligations. It would be a catastrophe. No way it's ever going to happen. Janet Yellen promises you that they will always be able to pay their bills. Now that's true. The difference, however, between the US and let's say any average individual is that the US can print their currency to confetti. They can pay it back, but in devalued dollars. So we'll see what happens as a result of that. Look, billionaire investor Leon Cooperman predicts the S&P 500 will plunge 22%, warns a US recession lies ahead. It is just showing us that on top of Mike Wilson, I believe it was from, I think it was Mike Wilson, but anyway, I covered that a couple videos ago. He said 3,000 on the S&P 500, and we talked about that briefly. Leon Cooperman seeing 3,100. Think about it. We're talking about a time in which the market peaked out at almost 5,000. It came down almost to these levels. I think it was maybe 3,400 or something at the bottom, 3,500. And 3,100, 3,000 is really not that much lower. So to experience that wouldn't be much. What's he saying? Of course, inflation, higher rates, spooks the markets, hits profits and so on. All the same things we've been talking about here. That's Leon Cooperman. We've seen other very successful investors say basically the same thing. Interest rates being high, not good for stocks. All right, emerging markets. Now I wanted to talk about emerging markets because this relates to the US dollar. Emerging markets will have to weather another dollar hurrah. The dollar increasing in value puts pressure on emerging markets and their currencies and so on. So for people, they should be aware of this, and I wanted to briefly discuss it, okay? Some investors are becoming more cautious about investing in developing nation currencies due to the recent strength of the US dollar. While some investors predict the dollar will soon weaken, others are wary of being caught on the wrong side of the latest dollar rally. However, there are still some opportunities for selectivity as some developing economies, such as those in Latin America, offer higher yields and have already tightened their monetary policy, which makes them more resilient against the stronger dollar. So you have to see the balance in between these. That's really key. If we only see it as one level and so on, we're not going to get the full picture, and that's why I bring this to you as to what's happening. That's really the takeaway from this article here. Watch what happens with their central bank activities, and you'll know how their currency is going to perform against the US dollar. All right. Next aspect right now, I want to talk about what's happening with real estate. A lot of people are asking me very regularly. What's going to happen with real estate? Should I buy a house right now? Let's talk. Let's talk about this. One of the main issues that we have is with commercial real estate. Way too much of it, especially in the United States, it's really gluttonous and overbuilt. OC malls fading from their hip glory days may get new lives as apartments. So they need to change the zoning. They need to reconstruct the buildings in order to be opportunistic, and they're doing so. This is positive news if they can do it. I think a lot of these cities have gone into really, well, number one, no affordable homes, tons of poverty, just really terrible, actually, in many cases. A lot of the cities, whether we're talking about California, whether we're talking about New York, other places as well, they just really become terrible and degenerated. So we need to figure something out. One of the problems being commercial real estate, way too much of it, way overbuilt. They need to find affordable housing. Perhaps this will be the strategy for that. We'll look at that into the future. Palm Beach residents upset over newcomers from the north. So much rudeness. Well, part of this is the fact that they want more affordability. You see, these things connect in together. It's not just on the commercial side, it's in the residential as well. So that migration is happening. People coming from New York, they're going to Florida. People leaving California, they're going to Texas, they're going to Arizona. These trends are continuing. And so we have to pay attention to that. And if we're an investor, we got to be on the right side of that equation. We don't want to be in the place that jobs and people are moving out of. We want to have those investments, businesses in the places that people are moving to. I think that's pretty clear. Okay, that's a real takeaway right there. Dubai's luxury homes lead the world's best and worst property markets. Dubai is now the world's fourth busiest luxury real estate market. City's prime home prices are expected to climb 13.5% this year. I've talked about this over and over again. Dubai is becoming one of the number one cities. That's shocking, considering what it was 2008, 2009, how there were so many empty buildings. Construction would just stop, literally stop in its tracks. There would be half empty skyscrapers. And unfortunately, they just went crazy on the building. That took several years to start up again. And now the market has been non-stop. Money is coming from Russia. Money is coming from Europe. Why would people invest in Europe right now? Really, why would people put any money into Europe? There are a few cities, sure, but look at the trend. Look at the trend there. The trend is moving towards Dubai. Now, the problem with Dubai, United Arab Emirates, is that it's very close to a lot of different regions. Instability in this region is a concern. That would be the biggest point. Other than that, really strong investment case for Dubai. Not as much as like, other Abu Dhabi, sure, as well, but not like Sharjah and other places that, don't see as much outside capital. Dubai is really the one that has had a lot of growth. Canada is among the countries most at risk of housing crash, spiraling into a bigger crisis. According to economists, yes, overheating, absolutely. And then you increase interest rates. What do you think is going to happen? I think it's pretty obvious. For a lot of the cities in Canada, they just got overbuilt. And then what happened? Oh, the savior was 2020, right? Oh, no. The savior was not 2020 because people started moving out of the big cities into the smaller cities, pushing the prices up, pushing those people out. That is not good for them, obviously. They really got hurt with that. And we see it today. The fact is people can't afford what they have, and this connects in. Oregon bill would pay homeless people $1,000 a month. What do you think about this? This is part of a universal basic income. I believe that there will be widespread universal basic income that will be proposed to everybody. Maybe it's going to be connected with the central bank digital currencies. I find this to be concerning on the whole. When we look at it on the whole, obviously we want to help everybody. But when we just sort of zoom out and see how this is all getting paid, what that means for you and your tax dollars, I want to know what you think. Please put it in the comments below. I really strive to get the greatest information for you each and every single day. All I ask is that you hit that thumbs up button. Less than 10% of people do that, and I want to thank you for doing so. I'll see you tomorrow. Take care.